now going to seamlessly move our way into the world of compliance, and hopefully those of you that saw us dancing last night underline that compliance guys can dance and girls. So we're going to try and give you a few different perspectives through this session. We'll try and make it a bit of a conversation. We'll throw up a few slides because it's compliance. But just in terms of the different perspectives you're going to get from us, Kapil, who obviously founded the business and has led the business in India, will particularly focus on the kind of India experience and leading the Seamless organization. Michael, who ran the business in India as well, but originates from the US and is now based in Washington, DC, so will give us the US perspective. And myself, who I moved here in 2011 to run the now Seamless organization, and I'm based out of the UK. So you're going to get three different perspectives. So hopefully if I press this, we're going to get some slides. Yeah. Okay. You've all heard a lot about Acumen over the last couple of days and the great work that the team is doing. There is, as you'll have also have heard, another part of the Sanam S4 group called Seamless. And we support organizations, particularly higher education organizations, but also the wider international nonprofit sector and businesses with their work as they internationalize in India, Asia, and beyond. We focus particularly on the real kind of nuts and bolts of establishing legal entities, dealing with taxation, compliance, and regulatory matters. So that's just a little bit about us. I'm now going to turn the conversation to my colleagues. And Michael, I think we'll start with you. Maybe you can kind of help us run through, I guess, the key models that we tend to kind of support institutions with from a kind of compliance perspective.
Thanks, Ed. And welcome, everybody. It's been a wonderful couple of days here, seeing some very familiar faces and reconnecting as a group, as a team. And thanks to all of our clients who have flown from all over the world to spend some time with us to gain some of these insights. So when you're talking about the different operating models, there's a number of legal structures that universities have explored, and Kapil can go into a little bit more detail about which ones are most utilized in the Indian context. So you have incorporated structures, you have unincorporated structures, which is our kind of in-country representation model driven by Acumen. And I think, we'll get into it a little bit later, but there's a whole spectrum of those sorts of options as well that we can talk about that have various levels of risk attached to them. Third is online delivery, something that we've heard about quite a bit over the last couple of days, but it's another operating model that universities are looking at when they talk about global education and talk about delivery of education in India. Then we also have collaborations with Indian higher education institutions. So, TNE as off the back of the NAP is a really great kind of opportunity that we're seeing develop and that has kind of matured perhaps in other parts of the world, but is really taking hold and taking shape and form here in India. And then, I think the last one, and some of us will be traveling to Gift City up in Gujarat on Monday to explore this opportunity, but is opening a campus. There's been lots of discussion of this over the years, but from the Seamless perspective, we're looking at this from a very kind of pragmatic perspective in terms of, building budgets, what types of, again, back to legal structure, what types of legal structure, how would you repatriate tuition dollars. These sorts of things are what we're looking at as that model kind of takes hold in India. So those are about the 5 kind of operating models that we've seen within the higher ed context.
Perfect, Michael, thank you. We're now going to get into a bit of detail. Kapil, maybe you can kick us off by looking at the legal entity options that presented in India for institutions and taking us through a few of the thought processes. We're going to cover this at a reasonably high level. There's a lot of detail, but over to you, Kapil.
Thanks, Ed. Let me paint the picture first. So, why do you need a legal entity, right? And that's the first question which we need to decide as a foreign institution. And once we decide, okay, this is the reason, which I'll cover, later on. But once we decide that the legal entity is needed, then India is, when I use the word very easy, in a very bigger context, you have 2 different types of structures. One, we call it as the incorporated structure. The other is an unincorporated structure. And if I have to explain again in a very simple language, incorporated structure are again bifurcated into 2 basic parts. One is an extension of your foreign institution, which means a liaison office, branch office, project office. And when I say it's an extension, which means you're opening these offices, legal entity structure in India, where your liabilities, risk, everything still flow back to the institution. So anything you do in India under, say, for example, liaison office or a branch office, project office are generally not done by the foreign institutions because project offices are incorporated for a specific project, like building up the Delhi airport, for example, and institution will not gonna do it. So liaison office, branch office have unlimited liabilities attached to the foreign institution. So that's a very basic difference which I will create in that first part of incorporated structure. And second basic R is more about what you can or can't do from these structure. Like liaison office, you're not allowed to receive any funds in India. So you just have a bank account, money comes from overseas, and you spend the money. It's an receipt and expenditure. There is no income there. So that's liaison office to you. Similarly, branch office, as we hear in the higher education institution, it's like a branch. It's like a branch of a head office sitting outside. You are allowed to receive fees. So once you open a branch, you are allowed to receive fees, but it's taxed at a very high rate, 40% plus. And like Michael was saying about the gift city, so I'll come to that why or whether branch office is a solution in India, as you are going to gift city and may ask them, can we open our branch there? So we'll come to that. The second part of the incorporated structure is, again, very simply put it, you have a for-profit and non-profit. Under the for-profit, you have a PLC or a LLC model in US. You have a LLP, which is a limited liability partnership. In the non-profit, you have 2 options. You can open a trust, which is a very well recognized non-profit structure anywhere in the Western world as well. And the other is a Section 8 company, which is a non-profit company. You do get the benefit of a tax-free perspective. You take some tax exemption from the local body, and you go on for a Section 8. Again, there are implications for having a for-profit, non-profit. I've spent 15 years convincing the international institutions, boards, telling them what is a for-profit. It takes time. It takes even time for a charter document, which is 1800 century document lying somewhere, and I have to search for it. It depends upon many other factors. So this is primarily from a incorporated structure perspective.
Okay, fabulous. Michael, I think it's fair to say the US has kind of led the way on deploying kind of legal entity structures in India. Maybe you could just sort of unpack some of why.
So I think, I think when we're engaging institutions, I think it's really important that we understand what their broader vision is for their involvement in a particular market. It all goes back to the underlying objective that they have. I think for many institutions here, increased visibility, increased student mobility is a very core focus of their institution. And there's various different models that can kind of support that, and that's what we've built with Acumen's ICR model, is one that can really effectively, efficiently, compliantly, and well-managed kind of support that aim. When you get to joint research, when you get to alumni giving, when you get to moving funds internationally, one way or the other, that's typically when you get to a point where you need to start exploring a legal structure. So in the US context, I think with the size of the research institutions that are there, with the type of faculty that they have and the types of projects that they're working on, they're deploying funds, looking for ways to deploy funds globally in order to further their research. So I'd say research is the number one kind of thing that tips the scales. But increasingly we're seeing development. So, a university will have, off the back of, generations now of student mobility, success stories of students that studied in the US, came back to India, became very successful and wanted to give back to the institution, but wanted a tax credit locally as part of that kind of gift. So, structuring that in a way where the institution's objectives, the alumni's objectives can still be accomplished, is kind of another thing that we're seeing more and more. And now this kind of third category, which is super new with GIFT and then the recent UGC guidelines, is opening a campus. Obviously, if you're going to open a campus in India, there's going to be quite a bit of transacting, internationally between the two countries. So I think those are the three main areas. Kapil, I don't know, anything else in terms of kind of major objectives of the institutions? I think there's some...
To be honest, too many.
Yeah.
So we at Sanam S4 in the last 15 years brought 5 of the top 10 US institutions into India, pretty well-known Ivy Leagues, to the tier 2, beyond 100. And it covers many things. We have institutions who are doing clinical trials in India, right? We are having institutions who are just writing curriculums for the Indian institutions.
Publishing houses.
Absolutely, publishing houses. And many other things. So when I go on the road in US and North America, I do say around 12 different objectives which an institution is trying to achieve in India, and they have successfully done almost 10, if I can put it, but it's expanding. It's expanding.
Yeah, and I think the point on that is just back to the structuring bit, is oftentimes there's not one structure that will service all of the objectives. So more and more institutions are needing to open up dual structures with for-profit entities, with not-profit entities, in order to cover all of those objectives. Just at a very high level, one of the big no-nos in a non-profit entity in India is you can't take any money out of India, out of an Indian non-profit. So that completely cuts off. If you want to bring money out of India, you're going to have to do it through a for-profit structure.
But even to get the money into non-profit is also too difficult, huh? So
yeah.
It's a different world altogether. Yeah.
Brilliant. Okay, that was the introduction on legal entities. There's much more, but we'll move on. Kapil, let's talk a bit about in-country representation models. Obviously, the Acumen model, as Michael's outlined, absolutely a leading model in this space, but there are other models, and I think we're just going to dive into a little bit about what an in-country representation model is and some of the do's and don'ts.
Well, I don't need to explain. We already have, beautiful audience who already know. 80% of my colleagues are sitting here, even more than that. So, again, if I simplify that for some of us who don't know. So, in-country representation is an unincorporated model. I have already explained the incorporated model. So, which means you do not have a legal entity in India, which means you have a person on ground who is waving a flag, who is trying to achieve your objectives. An objective could be, for example, student recruitment, and others, the partnership, the research, and many other objectives. And it works in a very simple way that you have a service provider like Acumen, and service provider have a person, 5 people, 10 people, a large team as well, on ground for you. And they recruit that person for you on their payroll and manage that person to achieve your objective in a more compliant consulting service model. So I'm trying to simplify a bigger thing here. So that's ICR to you. So you have people on ground who are running around. So you on a unincorporated structure, you do not legal entity. You do not have a hassle of setting up an entity. It takes you 3 to 6 months. You do not have a hassle of winding up, which might take 2 years. You don't need a bank account. You don't need HR. You don't need many other compliance issues there. You have a trusted partner like Acumen who is managing on the ground everything for you. And trust me, India is a difficult market. That's when Adrian and I started Why India. It is a difficult market. And then we ventured into the other difficult markets. So it has been simplified, the ease of doing, and things are happening. But the compliance is still one of the big issues. When we travel to meet our clients internationally and see them today, it's one of that factor, one of the big factor to select an ICR kind of model. However, the way you handle an ICR is also somehow become tricky. Yes, I'm able to set up quickly, I'm able to run on the ground quickly, I have a very fixed cost I know of a person, or the budget, the travel, the marketing, and everything is all fixed. I know what I'm going to spend, and which is a very good thing, because sometimes once you have a legal entity, it's difficult to even budget certain those kinds of compliances. So that's also a good thing. But at the same time, you also have certain do's and don'ts, which becomes like a rule book. So you do need to follow that rule book to make sure that the ICR structure, the unincorporated structure, is a compliant structure for you. And when I say compliant structure for you, it comes from 2 perspectives. One is you're trying to achieve something in a way without setting up a legal entity. So why would a country allows you, a government allows you, to do something without setting up a presence there? They want money, they want the foreign direct investment, they want a legal entity there, they want to generate employment, they want to have a bank account. So they want you to have a proper feet on the ground. So if you don't, which is unincorporated, it becomes a structure which you need to comply with. Which means one of the bigger issue, as I said, is the Reserve Bank of India, which is our federal bank here in India, which asks you to set up a structure, and if you don't, then you do need to inform them if you do not follow the unincorporated structure. The second is the tax issue. So when I say tax issue in a very simple language, that you are creating an establishment in India without creating it. So you do not have a legal entity, but are you trying to do something which you were supposed to do when you have a legal entity? So which means that you need to make sure you do not have any kind of permanent establishment in India, which is a word defined under Indian tax rules, regulations, as well as something called double taxation avoidance agreements, which two countries sign together so that one income should not be taxed twice. So India, US, India, UK, India, Australia, and so on. India have probably more than 90 such agreements signed with so many countries. So that definition of permanent establishment is very well defined there. So what we need to do, a great ICS structure, let's set up certain rules, do's and don'ts, where you make sure you comply with it. Now, what are those do's and don'ts? It's when I'm taking that pause is just from a perspective is I have been trying to achieve those do's and don'ts for years, and it's not easy because we are trying to achieve our objective as I dare put higher education as a business, but at the same time we are running on the ground and trying to achieve some shape or form the fee, the income, the profit, or say different activities, right? So one basic rule is when you have a person on the ground, that person should not be treated as employee of a foreign institution. So there should not be employer-employee relationship between these two entities, a foreign institution and the Indian ICR. How do you avoid that? That person should ideally not anywhere in the market, social media, your LinkedIn profile, should not be quoting themselves as being the employee or having a very strong relationship which term them as an employee with that institution. The ICR staff, that person on ground, should not be signing any binding agreement or a specific, a paper on behalf of a institution which make institution liable in India. And when I say liable, generally speaking, say a sales activity. I'm again using corporate word, but sales is sales. So for example, if you are going in the market, you are meeting a student and you're saying, here is your offer letter. Generally it doesn't happen. But the ICR should not be having the authority to giving an offer letter to the student. And that is why you see many times the ICR teams have to eventually take the permission from the international office. Here is all the documents. My job is to do the licensing for those documents, vouching those documents, but ultimate decision maker is sitting somewhere in the international office. And that's why the reason they are sending. So that's the logic behind why this has been operating this way. Because we also do not want to create a tax presence for the institution. There are a few more. So for example, that the relationship when you work in the ICR in India, the ICR should also be working in a more consulting model, which means that they are providing the advisory, the consulting services on behalf of an Indian service provider, say Acumen, to the foreign institution. So it is more like a consulting model where Acumen has signed an agreement with the foreign institution, provide them consulting services, and ICR is our advisor, which is a dedicated advisor to you as a foreign institution, and he is your face who is a dedicated person doing services for you. So that mannerism of being an advisor, consultant, country person should be there. Further, if I go a little further, then it more from a perspective of that when the ICR is operating in India, when he's going, the question comes in, okay, can I use the business card of the institution? When I go in the market, what do I tell the agent? Whether I work for the institution or I work for the Acumen? I mean, there are answers to that how do you operate in the market? Eventually, and at the end of the day, the ICR is working for the Indian service provider. He's an employee, he or she is an employee of the Indian service provider, and he is working as an advisor to the foreign institution, which can be explained as a very straightforward, simple model which is working not only in India. When my team and we were setting up our own Sanamas for office in North America or in UK, there are those kinds of service models there as well. In Vietnam, in Malaysia, when we were setting up there. Of course, there is another step which they call it PEO, which is a professional employer organization, and I don't want to touch there because that's a definite no-no in some shape or form for India. If I go further down, the ICR person operating in India should not be a lone road warrior. And what I mean by that, that person or even the service provider should not be working only for one or two institutions. So there is a term in the Indian tax law which says dependent agent. And what is a dependent agent means that if the revenue of the Indian service provider is dependent upon one or two institutions, so you are dependent agent, which means that you're working wholly for that institution only, you are a tax presence. There is no gray area. I mean, there is no other doubt there. If there is a lone warrior working and representing for only one institution or say maximum two institutions, he or she is creating a tax presence. Whether they, and people sometimes come and ask me, oh, I saw so-and-so person and he is actually operating in India. Why government is not catching them? I just can't answer. I can only say we are 1.4 billion people. One day, government might catch them. We are still defeating China in population. So I don't know when that 0.1% persons come there or not. But law is clear that that person will be treated as a very simple warrior there. Sorry, you.
I was just going to comment on that. I think there's two things there. You're talking about permanent establishment from a tax perspective. But one of the things I've learned, there's many similarities and differences between labor law and employment law in the U.S. and India. But one of the things that is quite common is the analysis that is done to determine a consultant or an employee. And one of the things I think is where are they exclusive? If they're exclusive to, so it's not only, I guess, tax law violation, but I think also labor law and labor compliance is an area where you can get kind of tripped up running that model, because the government of India or any government has an interest in their people receiving benefits and being part of the kind of official labor force. So I think just another kind of twist there in terms of from a compliance perspective.
Absolutely. Thank you, Michael, for that. One or two more. So for example, the performance appraisal of the ICR should be done by the Indian service provider. The decision on salary, the decision on bonuses, the increments has to be with the Indian service provider. Again, why? Not to create the employer-employee relationship between the two distinct entities, which is the Indian employee or ICR, as well as the foreign institution. So there are those kinds of soft areas. I would say just simply, if you're not able to decide, just think of that you need to avoid creating that employer-employee relationship. As well as, for example, another don't is the foreign institution, as I said, do not have an incorporated version here as ICR, so which means they can't say they have an office in India or any country they are setting up similar model. So they should not be on their website or in their, these kinds of events. Should be launching their office. Once they have ICR, they might say, oh, I'm launching my India office. There is no office. The office is of Indian service provider. So again, very basic. Whether out of 1.4 billion events somebody will get to know or not, I don't know. But the law is clear there. So these are some of the straightforward, simple do's and don'ts. If you comply with them, it's a great model.
Fabulous. Okay. We're going to change tack onto the next topic, so it's going to be back to Kapil in a second. We're going to move on to digital delivery, online learning, which obviously could be a complete solution. It could be embedded as part of a course. There are implications. Kapil, can you maybe quickly take us through?
Yes, so this particular area, the digital transformation in the higher education field is growing day by day. As you have seen the new regulations coming in, you could see many other activities which are performed digitally. COVID has, or coronavirus, that couple of years have really pushed everybody to provide education in a more digital form and manner. And the Indian regulation have also been coming of the age to improve themselves. How do you deliver the digital collaboration? An Indian institution is signing a partnership with a foreign institution where the job of the Indian institution is to fetch students and provided probably their own infrastructure to have the student do the course of a foreign institution sitting in their campus. That's also possible. Student can do the course sitting in his house and pay for that digital course online. The trick points, or I would say the compliance points or regulatory points, are how and who is transferring the fees. So if the student is making a fees payment directly to the foreign institution, I think you're doing well. So there is no compliance issue because Indian regulation is not that strict, or I would say regulated for an Indian parent or Indian resident individual making payment overseas. So there is concept of withholding taxes is not very strictly followed or regulated. However, when an entity, which is an Indian institution or a corporate, sending their corporate employees for a digital course in their offices, then the withholding tax issue comes in. Withholding tax is nothing but a party in India making a payment to another party for a fees, and they have to withhold 10, 15, 20% tax, which becomes sometime an issue like a cost, because once you withhold a tax in India, then that tax might not be recoverable in your home country. Even if India, US, India, UK, India, Australia have the double taxation avoidance agreement. But it's a credit, it's not refund. So what is a credit? Means if you are paying tax in your home country, then only you can claim the credit of the tax which is paid in India. But you are a non-profit. You are not paying tax in your home country. So there is zero tax there. So this tax paid in India is a cost. So either you build that tax in the agreement you have signed with the Indian corporate, Indian institution, you charge 10%, 20% extra to them, or you absorb this cost. Very tricky, important point, which many deals I have seen, I personally negotiated even for Ivy Leagues, got stuck at the end. Who will bear this 10, 15% extra cost? Sometimes the cost is also GST. Sometimes the cost is the new law which came to India a couple of years back called equalization levy, which is a tax on digital activity, like a digital fee, like a student paying online. So there is a tax called equalization levy. So on. So I would not go deeper, but it's a very incoming of age topic.
Perfect. Okay. We're 3 topics down, on to the 4th. So before we come to Michael, back to you, Kapil, again, this time on collaborations. Obviously, with UGC changes, the TNE sessions you'll have heard earlier, this is a scenario that looks likely to present itself more frequently. So maybe you can just talk us through key considerations there.
So I don't know, I'm sure or I hope you might have heard about the new regulations which are coming to India. But before that, if I talk about the collaboration, so it has been going for years. So a foreign institution having a collaboration with the Indian institution, it's towards dual degree, twinning programs, and combined activities where you have been sharing the revenue for that fees, if I can put it in a further different language. So collaboration has been going for years. You need to pick and choose for that collaboration, do you need a structure in India or not? Again, if you are able to provide the services sitting in your home country, you don't need a structure. But if you need academia, if you need to have people on ground, we have some of the institutions from both US and UK who have collaboration with Indian institution, and they have to fly in, fly out their staff. That goes back to my previous problem, something called permanent establishment. I don't know how many of you, as representative of the foreign institutions, know that how many of the international staff traveling to India in a year. There is a regulation which covers India, US, Australia, that if your staff traveling to India for more than 90 days in any 12-month period, you have a permanent establishment. And I can give you in writing, 99% institutions are not even tracking it. So that's the reason you see sometime the fly-in, fly-out approach not only doesn't work because you can't be in the country all the time, but because the team, the CFOs of the institution, the vice provosts, they all know it's a tax issue. That's why they are not choosing the fly-in, fly-out approach, because once your staff, your team, your international office spend more than 90 days in India, cumulative, any staff of the institution, you create a permanent establishment. So coming back to this topic of collaboration, that ideally speaking, if you need people on ground, you need some structure. If you can deliver it from online, you're doing well. Take your fees back to home country with withholding taxes, just like that.
Or staff it. You could staff it through your partner as well to a certain extent, right?
Here's the ICR for you.
Say it again.
Here's the ICR. So ICR, you can staff it by ICR.
No, but I was saying if you have a T&E kind of partner, if you're partnering with an Indian institution, what types of resources would they be able to provide, I guess?
So if you partner with, so for example, the academic.
Just thinking a bit, about professors.
Yeah. So it's complicated because, for example, a professor coming from US working with the Indian institution, whether that professor wants to leave his national insurance, leave his job which he was doing at the institution and take an employment with the Indian institution, no. He would say, second me there. And that's a permanent establishment issue. Because he wants to keep his US employment, national insurance, everything there, and still become an Indian employee because he's working for the Indian institution. How do you unstructure the complication around? That's why we say it's better either you hire the Indian staff, Indian national, rather than sending the professor and academia from overseas. Otherwise, you just do, again, better fly-in, fly-out approach.
Great. Okay, we're gonna switch tack onto one final topic. So that there have been two. Well, in fact, as a scene setter, so I joined the business in 2011, and there was a lot of talk at that time about something called the Foreign Education Providers Bill, which had been in circulation for a good amount of time before I arrived here. Roll forward 2023, and there have been two major developments in that area. Michael, I know you're particularly interested in this topic, so I'm going to ask you to kick off with GIFT. I know we've heard yesterday from part of the GIFT team, but we're taking a delegation down to GIFT on Monday, which we're excited about. But maybe you could just give a bit of background and a few thoughts, and then we'll come back to Kapil.
Yeah, sure. So I think GIFT is a unique opportunity that was launched in the finance minister's budget, not this past February, but the February before that. The government is super keen on attracting higher education institutions, certification bodies. They've really kind of expanded the types of institutions and organizations and curricula that they're welcoming to GIFT City in order to skill up and provide workforce and talent for the structure that they've developed there, which is essentially a special banking zone, like a special economic zone, but for banking, to make it easier to do forex trading and other financial kind of transactions. So I think India is looking at GIFT as an opportunity with this kind of with creating a special jurisdiction to kind of ease off some of the complexities that are involved with the University Grants Commission and the challenges for kind of opening up a campus through that route. So maybe we can kind of pass that over to Kapil.
Well, Kapil, why don't you give part two of the story on the recent UGC draft legislation that's been issued?
I have been waiting it 15 years, and we have been pushing it. And each time, we talk about let's submit a paper to to the ministry. Let's push them to have some sort of a local presence. We have been seeing China, Dubai, Malaysia, many other countries opening up to the foreign institution having campus. And finally it's here after so many years of push. The regulation is still coming. So UGC, which is University Grant Commission, which control the higher education in India, like setting up institutions, they came up with this draft regulation which allows the foreign institution to set up a campus. This is separate to GIFT City. GIFT City is like Michael saying, is a finance tech zone, which is a city within a state, and that's where you do many things. You can set up a financial bank, you can set up a higher education campus, you can do all that tax-free there. UGC is University Grant Commission allowing foreign institution to set up campus anywhere in India. And that has its own, regulations, how much fees you can earn, how many years they allow you to do that, what kind of entity you need to set up, how do you bring monies in, how much fees you need to charge the students. There are certain draft regulations which they have already published. We took those regulations, we gave our input asking our partners that if you want to set up, what should you want in this regulation? And we have already submitted our response. And in next few months, I do see the final regulation should come. And that will be a big, big door opener. So for example, they are allowing up to ranking of 500 institutions, they are allowed to even set up the application. So it's getting there. I'm very, very hopeful that that will take us to the next level of having follow the journey and having further campuses of foreign institution in India.
Okay, perfect. Future is bright. So with that, I'm afraid we have to draw to a close. So on behalf of the Seamless team, thank you for listening to us. Hopefully you found it useful. We're here to answer questions now and into the future. So thanks very much.
Thank you.